Hey guys, Dave with Moniology. Hope everyone is having a great weekend. This is the weekend market review for December 23rd and 24th, 2017, the Merry Christmas edition. We're going to go through many of the important sectors in the market, analyzing from daily, weekly, and monthly perspectives to give us a better understanding of where we've been, where we are, and where the high probabilities of where we're headed. Let's take a look. All right, we start here with the 10-year Treasury from a daily perspective. You look and it's consolidating right below that 25, the 2.5 level. It looks like it's about ready to break out higher. The RSI has broken above the 60 level, and now we've kind of consolidated right above that 60, and it looks like we're setting up for a move above the 2.5% level on the TNX. Next on the list is the weekly chart here, and again we see looking to break above 25 here, and we're about to break above the crucial 61 point of the RSI. Looks like there's some significantly higher yields coming in the not too distant future. On the monthly, here again, it's double topping at the 60 level, but there's plenty of evidence to suggest that we're moving higher. We're going to break out from this double top. Why did I say that? Well, the MACDs have curled lower, but now they're starting to circle back higher. It looks like we successfully retested this breakout from the upside, and now the next move is 3%, likely to be hit within the next coming months. So this is going to significantly impact a lot of interest rate sensitive fixed income and equity instruments. Looking at the gold daily. Now gold, a lot of folks were saying, well, gold doesn't go higher when interest rates go higher. Well, actually, that's not the case, and we see here that interest rates are moving higher and gold certainly is rising. Well, gold is now firmly above the 50 and the 200-day moving average, and looks like it wants to head back to retest the 1300 level, which it likely does in the next week ahead. So really like gold here. We'll likely do a video in the coming day or two on precious metal sector. Taking a look at the gold weekly, now we closed the week above the 50 on the weekly RSI. We successfully retested this downtrend here from the upside, and now if we break above 1300, that's confirmation that things are really starting to rock and roll higher. And taking a look at the gold monthly, again, we've been consolidating here for 1, 2, 3, 4, 5, 6 months at this trend line here, but consistently above the 50 on the monthly RSI. That's a very important factor, and if we just have this big move forward 1 month that we have a 5% move higher, for example, that'll really confirm that indeed the next significant leg up will be higher. High yield junk ETF JNK. It looks pretty good actually on the daily. It's been consolidating here for a while, right above the 50 on the EMA, and it looks like it's starting to move higher. So I kind of like how this is looking for the time being here. The MACDs are starting to curl back higher. Volume's starting to pick up. Stochastics are starting to curl higher. So JNK on the daily looks pretty good. And on the weekly as well here, it looks like it's setting up for a move to break above the 60 on the RSI. So retest of that 37 level is very likely, and if it breaks above that, it looks like we're heading to new highs there. On the monthly level, it looks good. We had this nice hammer pattern on the monthly in November, and now it's starting to pick up higher and looks like it wants to make new highs in the coming months ahead. But again, MACDs are rolling over, so that's definitely something to continue to look at. It can either do one of two things. It can circle back higher, which will confirm that indeed the market wants to move higher, or it can start breaking below zero, and that'll be confirmation that things are likely moving into a more bearish direction. Crude oil on the daily, well, it looks very good. It's breaking above the 58 level. It's now above the 60, about to break that all-important 61 level on the RSI. And with the MACDs having basically consolidated for a while, and now they're starting to cross above zero. It's a very positive development. Oil looks like it's getting ready for a move to cross 60. Taking a look at crude oil weekly, here again we unsuccessfully tested that 70 level of RSI. We curled back, we found support above that 61 level, and now we're looking to break higher. Once that breaks higher above 70, and we believe it will, that's a sign that the next move will likely be towards 65. And on the monthly basis, again, this is the inverse head and shoulder I've been pointing out. In fact, one of the very few that have been pointing this out, but you'll see more of this once we break above 60, above the 50 and 200 monthly EMAs, which are 59 and 62 basically respectively. Once those are broken up out to the upside, that'll be my sign that this is indeed going much higher. Now look at this. The MACDs are basically at their all-time at their 3-year highs, which is a very important development. RSI is higher today than it was when we broke down here in 2000 in late 2014 2015. So momentum is leading price, and that's what you want to see in a very strong bull market. Not really going to go into the individual Nasdaq, S&P, and Dow. Basically, they all look fairly bullish, but there's not much to see there. Until we break lower, it looks like momentum still wants to move higher. Now, the Russell does look a little weak. I mean, on the daily, it keeps making consistently lower highs, and with momentum, even as price retests all-time highs. That's not what you want to see. If this breaks below this level here, which basically it's already broken below that 60 level, and it looks like it wants to head lower. So Russell is weak, and at least on the daily. And on the weekly, you also see this slight negative divergence here. And if we can't break higher with very strong divergence, expect there to be a pullback in the markets, probably led by the Russell small caps. And finally, on the monthly looks good on RSI. Although this bearish wedge was broken down, and now it's trying to break it from the downside. But if it doesn't, if it can't recapture this particular wedge, then likely price action will likely head lower. S&P looks pretty good. Weekly looks fantastic. It's breaking basically all-time momentum highs. I mean, you can't get much better than the S&P looks right now. And yeah, monthly the same thing. RSI is leading price action, and that's exactly what you want to see if you're a bull. Now the dollar is very interesting here. The dollar's kind of consolidating above this 40 level on the RSI. Can it hold? We'll see. We're below right now. We're below the middle Bollinger Band. We're below the 50-day moving average, below the 200-day moving average. There's a lot of resistance here to the upside. So if it can't find this double bottom support here and build a base and move higher, likely it moves lower. And this is kind of what the weekly is showing. This is why it's so important to see multiple perspectives. We're below the 200-week moving average right now, and looks like we're creating lower lows on momentum. And whereas daily looks like it wants to move higher, weekly suggests that lower prices are ahead in the US dollar, and the monthly looks pretty weak. MACD is basically at their 3-year lows. That's not what you want to see in an uptrend, even though this is still above the 50 and the 200 EMA on the monthly. If that breaks below it, and there's going to be a lot of support here, but if it breaks below it, that's where I expect the 87.50 level to be tested, followed by the 80 level, possibly as low as 72.50. Not saying it's going to get here, but those are certainly levels to look out for. Finally, the Volatility Index is starting to show some signs of life, but we've been harking on this for a while. Every time it shows signs of life, it seems like it gets knocked down. It's still been consolidating around the 50 level, and eventually it's going to break higher and it won't get knocked down. But until that happens, I don't expect to see anything from the Volatility Index from a trading perspective. Taking a look at the world stocks, they look pretty good here. It looks like momentum is taking it back above that 69.70 level here on the weekly, and so it suggests that we are indeed moving to higher highs in price action. And on the monthly basis, still this very fascinating chart here where this RSI level seems like it cannot be broken above. If it does break, that's a sign that emerging markets are likely headed to test this 2400 level. If it pulls back here, that's going to be the sign that things are indeed moving towards a correction. Anyway, guys, Merry Christmas to those of you who celebrate it. Thank you very much for watching us. Appreciate the support. If you haven't done so already, please follow us on StockTwits and on Twitter at Moniology, and you can subscribe to our videos on YouTube at Moniology. Thanks, and have yourself a wonderful week and a happy new year.